Welcome to TradeTheNBA.com. This is John. This report is for the 13th of December, which means Friday, I guess, is my birthday. Go figure. It was another really nice day. We had these very key levels of the 23%. I'll go ahead and click it since that price number is right on top, right at the 26.72 and a quarter. We also had 66 as a key level, 26.66. From an algo standpoint that we had been talking about on the 5K. And so as long as you're above it, hey, everything's great. And it looked like it was really strong because there was a huge gap up. There wasn't much fading, and then we started fighting right around it. And it became more and more increasingly difficult for them to hold price above. And then once it started to go below, the cascade for that is very fast because, again, that 26.35.50 becomes the next spot that there's any interest. And we'd seen a lot of positive returns here. I mean, the potential for the rising red here was going to create a higher pivot. All good stuff. The orange was heading straight down. And when we started the day, we were kind of flat, a little bit lower with the green, and it ended sort of flat. So we're starting today with a crossover, but as you can see also, the orange is rising as well. So orange at negative 9401 is above the green, making that crossover bullish to some degree, but not giving it the buy signal that you would expect when you get the orange dipping below. So I think that, again, the thresholds don't change. In fact, this range between the 35.50 and or above that 23% number, 72 and a quarter there, really becomes significant. And you can see we're very close to that 26.66 number that we'll look at on the 5K chart as being very poignant. So really a crossroads, as much as people want to talk about either excitement or gloom and doom. There are key thresholds that attract buyers and or attract sellers, and they play in between those. Now the NQ is stronger because it's above the 23% and also producing almost identical, but a little bit worse with the green because it's below long-term buyers red. So this one's a bit more bearish and a rejection of the sustained long. So yes, we can still get additional moves, but without that orange dip below, you're unlikely to see it sustained unless the green can somehow overtake the orange move at that point, which doesn't really happen that often. The euro is still doing just fine given the Brit exit thing is going nowhere. There was no confidence vote. May survived it, so that helped hold things in place. Nobody knows what to do with the treasuries, and a lot of this market problem is the fact that they really don't understand what the Fed is doing, and there's no clarity. And when there's lack of clarity, you get confusion. The confusion usually leads to these kind of swings. And that, for the most part, is what we're getting. A lot of people saying the glut in oil is simply because of the expectation for a much slower economy, given the fact that we've seen such a rapid rise in rates. This is all very similar to what Bernanke did right before the 2008 collapse. It's kind of ironic to watch a repeat. You would have thought that they might have learned something in between there, but clearly not. I mean, there was really no rush to raise the rates as fast as they have, but that'll be argued down the road. I think it was intentional because really they did not want this vibrant, high-paced economy that sort of scares them, which is an interesting thing because that used to be like a desired effect. So if we go back, we had the buy signals, and then we kind of floated up, and you can see there's that 26.66, and then there's another one up here at 75, which is just above what would be the daily 23%, probably captures a little bit more interest there. Could have marked this one, beautiful signal right there. So you see that. In fact, let me just put that marker right there because I should have had that one on there from before. It's classic. This is the green is above the orange crosses, boom. At the same time, steel's coming down, and then boom, crosses the cyan. And sometimes you get that to happen all in one bar, and when it does, that's the signal. And your expectation then is that you're going to get a continuation. Usually, if the cyan below red, which is always long when it first triggers, will carry through to create a DOC spread, which would be right here on the next bar. So if you missed it, you still had that, which was slightly higher. No objection to that. The difference being 78 to 80. And then boom, we proceeded to go all the way back down. So it was very effective from its broader standpoint. And we ended up with a lot of these signals right up here at the top, right around this 87, 88 range. And it proved to be that they were early, given where we were at in the signaling. We had reached overbought statuses, so it was interesting because we ended up with that 75 right there as an algo retrace level. And it's always good that I like to put these markers up because it kind of shows that flux. And then you're waiting for this final series of runs that you're going to get that take you to the inevitable situation. I marked this one though because it's kind of an interesting one. It's not. I should have put a different color to it because it's not really the classic scenario. This is more of a. This was supposed to be yellow from a buy standpoint. Change that color correctly. The orange dipping below. The crossover, very clean, and a resurgence of the shakeout. What I'm looking for in those shakeouts, though, is when I get to my peaks, am I making higher peaks? In this particular case, it was still looking fairly decent, but we started to put in the spreads of the meeting right here of green to cyan, and you get the spike up of orange, steel down. Even if you want to wait, you can wait for the classic, where everything is doing exactly what you want to. In this case, except for the steel. You had the orange rising, you had the cyan rising, or the steel was kind of flat, and then you had green crossing below red, and sure enough, that's right at the ABM, and then boom, the collapse took place from there, and that led all the way down to the low. And that, whoops, I hit the P2 right there. That was right around the 60 range, and so that was below that 66 level key. And so then you begin to watch. It's like, okay, hey, if they get above the 66, I'm liking it from a long perspective. If they're unable to break above it, then you know that they've got some difficulties. And in this particular case, traded back and forth along there, but kept making higher red DOCs, and then eventually, boom. After we started to flatten out, all these other ones had breaking new lows, which when they get new Fibonacci lows, even off of a pivot, they tend to fail. And so the warning was in it. There was going to be a little bit of a pop. We were still at negative shakeout at that point, but it had moved to right at that negative 13.5 range. And from there, we caught a nice little move before it did exactly the same. This one, you know, these are a similar momentum play. The difference is with this, where you're not getting, you have the orange and green meet here with green already under red, so it's already a negative situation. So as soon as it popped the first time right there, you'd be right on it because you're right at the edge with the steel. If I can give you the reading, you'll see where the steel was. So 298 and the cyan 228. So technically it hasn't crossed, which I wait for the next bar to mark it, but literally at the open of the bar, it literally spiked, and you could be just attacking the 38%. Became rather obvious at that spot, and it just dipped right back below that 2666 level, and then just kind of hovered there, and then dipped one little fraction lower, right when we had a buy signal with the orange coming below. But within the next bar, it kind of like faded, so there really wasn't a super strong expectation. I had a stop at the low there, peaked up, formed another sell signal, and then that one really took off nicely and led down to the end of the day, which was interesting because we were making these lows and everything, and all of a sudden it was like, oh, that's a buy signal on really decent rising red. Covered that to turn, and then boom, in the after hours, big skyrocket here. In the low liquidity, just to take out these previous highs, and so it creates a beautiful little short cover, but it was not sustainable in any way, shape, or form, and you get the classic beginning crossing right here, and it finalized itself right there. A little tough when that happens, when you see that big a bar, but you can see it continued all the way down to the low at 2650. So even after this move from the, you know, highs up here up at 72, closes all the way down at 61, you're thinking, okay, wait, the move's got to be done by then. No, because then you open up right here at the 61 and you proceed to go all the way down to 51 for another 10 points. So that's the massive activity. All good. As always, though, I will keep updating anything relevant. These were pretty straightforward signals for most of it. There wasn't anything unique taking place that caused my attention to be sparked, but if I certainly get it, I will put it out there. As always, though, trade well. We'll talk again, for my birthday tomorrow. Ciao.